Okay, where did I leave off before we crashed? I'm going to try to redo my analysis as far as what I would do on a daily basis, just so everybody can see the process. By all means, this is not the end-all way to do it, but I just want to share and record how I've been doing mine. So the only thing that I've kept on my chart is my top-down folder, which looks at some of the macro stuff, and we can review that shortly. I have quite a long recording. I don't expect everybody to watch the whole thing, but I do have a 3-hour recording from the other day's session for anybody who attended it. There was quite a few conversations that we had. And there was definitely some moves in hindsight contrast that worked out very well. So just to, I guess, look at that, we had the Monday session here, and we had spoke in the morning as we took this dive down. There was a few 5-minute entries that we outlined that could have been taken. I was not able to get into those due to just getting online. I had taken an opportunity at the top here and got stopped out, looking for the continuation. And then as we got a pullback over in here, there was an opportunity that we outlined as we were talking about some examples from Chris earlier on in the day. But in hindsight, once I pull up my volume profiles, you'll see we came up here and it ended up being almost perfect. We hit the Sunday open and previous day volume levels perfectly, and then we got our move down. I had spoken in the morning that we had one push out of Asia, so the Asia lows here, we pushed it down through it, but I was expecting that being a Monday consolidation, we could have a subsequent push down, and we, as you can see in hindsight, got that. Unfortunately, I was unable to trade the afternoon or do any more recordings, but that's life. But yeah, you can see that kind of what we were calling in the morning happened. We got a reach up to take out Asia high, and then we got up here, and then we also got a move up to our daily open, and when we moved back down, we took out that Asia sell side for the second time. So this created a good consolidation for Monday, and as you can see from here, we did make one more subsequent higher high, and then we just consolidated for the rest of the day. So looking at where we are from today, just off the top of my head, it looks like we continued that consolidation, and we took some sell side from the PM session here. So my immediate morning setups that I would have taken if I was able to attend would have been looking at something like taking, we had a push up from PM session, so we had lows here that we can mark out. I'm going to mark all this out shortly, but just giving a rundown of where my mindset is. We had the PM session lows here. We had Asia high, and we had an Asia low. Typically, I like to look for us to push the opposite side of the Asia range versus where the PM levels are. So the PM levels would be on the low. So we did this. We did move down through Asia in the evening, and then over the course of the midnight open, we pushed up, taking the Asia highs, and then we pushed right down to the PM lows. So that's the morning profile that I would look to be traded to the downside. That's completed. So the liquidity swipe from essentially yesterday afternoon, in my eyes, is balanced. So looking at a little bit larger time frame before we get into the macro, we have the highs that were set in here between 9 o'clock and 10 o'clock push, and we also have the PM highs here, which you can see we've just swept. So I was looking for these to be swept yesterday, or was it yesterday? Yes, I believe yesterday I had it marked out. We've also got PM range up here, which we'll go over. This is the 2 o'clock candle formation, so we had a very aggressive push down here. Nothing says that we have to come up here and touch this right now, but I have been looking at this for the last couple of days as an opportunity to sweep these ranges and get a move up. Quickly on a more macro time frame, on the 4-hour, we can see that we have a trend line that's been respected 3 times here, moving down. Typically, trend lines that are respected this well do get deviated. I consider this liquidity, and we are in an overall weekly uptrend. And the blue lines that you can see here are a 4-hour market structure that we've been marking out. So we made a series of higher highs and higher lows, and then we had a push down below, taking sell side liquidity. We formed a daily order block here as we moved away from it, and we made a new high. So far right now, until we take these lows, we're in bullish structure on the 4-hour, which is aligning with our weekly. So looking for smart longs is always good, but we're keeping in mind that we have this trendline liquidity that's being generated. So it's very possible that we get a move up to swipe this liquidity without taking these highs, and then possibly get a move to the downside. This would create a consolidation range that on a larger time frame, that we'll speak about shortly. But by sweeping the buy side here, we could have lower targets in mind. We could be taking out the low of this order block. This day, which we can go and look at right this minute, did close lower than 50% of the order block, which doesn't mean that we have to go anywhere. Doesn't mean anything by itself, but it can have added confluence that we can come down and at least test the bottom of this OB. We also have another order block here with a imbalance, a fair value gap, and a high volume vector candle that we retraced 60% of, which does typically mean that the vector candle has been balanced, but keeping in mind that we can still balance this lower half of it. Don't have the fair value gap marked out, but for reference, we did come down and tap 50% of that fair value gap. So it would be expected that if we come back down into this area, we do respect the 50%, which would be the low of this daily order block. So that's where my thesis comes from, that this 4-hour structure flip bullish should hold. But I will be looking for subsequent shorts back down into the range if we see a deviation above this trend line with all of our confirmations. So we have our previous Sunday open from the other week marked out here. That's always going to be a level to take a look at, especially as we move on through today and the week. We could get the deviation of this trend line and then respect the Sunday open to move down. So just a few ideas that can confluence against the trend bias here for the week. Taking a look a little more macro just to get an idea. We had a swing low put in here before a series of higher highs, and this was taken on the weekly. So 50% of that would be sitting down here. So it's not out of the question to revisit that after consolidation. And if you look at on the daily, we've made, get my bearings here for a second. We made break of structure here, and then we had a change of character as we broke these lows, and then we've had another change of character as we broke the highs again. So as far as I'm concerned right now, we're looking at a larger consolidation range that's sitting somewhere about here. So this is where my bias comes in, that even though we have bullish market structure and our 4-hour has taken sell side liquidity and flipped bullish again, I am still looking to hold that bullish bias, but staying conscious that we have this trendline liquidity and we're inside of a consolidation area. So if any of you can remember from what we talked about before, when you have a consolidation area, sometimes when you deviate either side, it can be the manipulation before a larger expansion. That's what Lorenzo likes to talk about. So if we saw a manipulation coming off the top here, that could be opportunity, depending on the time frames and when it is, that we could see a larger move down, which would feed into the idea of retesting this OB or potentially even coming lower, balancing some of these daily fair value gaps. We have another fair value gap down here with a lot of volume. And we're going to take a look at the volume profiles here too to layer on top of the idea, but just as far as market structure goes, we could get a pullback somewhere down towards here. But all that being said, if we see the opposite, if we get a move down below this consolidation, and don't keep in mind that this doesn't have to happen, we don't have to have the manipulation. We can do internal liquidity sweeps here, and then we can decide to move up too, that's fine, or to move down, maybe even respecting this trend line down further. So taking a look at a manipulation down to the lows there is another opportunity. So we're going to keep an eye on this consolidation, and we're going to see what happens as a result, and that's how I'm going to trade my macro bias. But those of you that were in the group the other day know that I like to take shorter time frame trades. So even though I'm trying to keep all of my longer holds on my scalps for multiple TPs are going to be in these directions, but we're definitely going to take TPs earlier whenever we get internal liquidity swipes and session highs and lows. So let's dive down a little bit deeper to take a look at that. So let's look at this as console for now, and we'll get rid of that. I think that's it for my top down, so let's get rid of this stuff for the time being. And as far as 4-hour candle formations go out of this consolidation before we pull our volume profiles, we did get a rejection off the top here. Oh, that's intense. I can't say I've been viewed by that many people, Gavin. I appreciate that. That's awesome. Thank you very much. I'm not gonna lie, I was very anxious to jump in and get a chance to trade 10 a.m. here today. So I have his video in my watch later, and I'll be checking that out later. That's amazing. So to continue on to here, for as far as 4-hour candle creation goes, we've got a series of wicks to the up and downside. That's indication of further consolidation, the inside of this push that we've had. Last week we talked about how this push down caught a lot of people off guard, and it swept some internal liquidity, but it didn't break structure. So the idea holds true for us to revisit this top area that we've been building liquidity on. So the same concept that we're looking at on the macro with the larger consolidation here, deviating to the downside or the upside before getting an expansion, we could see something similar in here as we're developing another range. So we spoke about Monday morning, we played the range, we had a deviation, let's go a little bit lower so we can explain it. We had, sorry, excuse me, we had consolidation, oh my apologies, smaller than that. We had a consolidation here. Make sure that I'm on the right spot. We got manipulation of the low of this consolidation, and then we expanded up, reaching our targets for daily open and the high of the Asia session that was intact. And then we dropped back down lower, drawing in shorts, and then took those shorts out immediately. So we've wiped all this range liquidity. And then taking a look at, let's go back onto here and start getting ready to pull our volume profiles so we can get an idea of what LTA Concepts are talking to us. So I've erased all my profiles so that we can kind of start fresh and go through it as a group. So the very first profile we're going to take a look at is the previous day. So starting this orange line is my previous daily open, fluctuating back and forth here. So from the first candle we got here to the last candle we had on the Monday, we have a volume profile here. Let's label this as Monday range. We'll put this in our fixed range volume profile folder. And we're going to keep an eye on this. So what I like to do is use the profiles and then we'll draw the levels in accordingly. So we spoke through it, but we did talk about what I was originally looking for before I came in here today. Unfortunately, I didn't get in here fast enough, was sweeping either side of this consolidation to get a move. So as you can see, we did take the highs out here during this this move here this morning. So the 4-hour candle starts at 6 a.m. So we had a move down, taking the liquidity from the morning session, and then the candle expanded up, taking liquidity off the top of the previous day range. So we have internal liquidity swipe and we have an external liquidity swipe as far as daily goes, and we are getting a move down. So we'll look a little bit in the future. There probably would have been a setup in here that we could have taken, but we're not going to rush into it because we're still doing our bias and our TA for the day. You never know what kind of continuations we can get, and if we miss it for today, well, that is what it is. It'll be a learning session. So we have our, sorry, pardon me, I need some water. There we go, hopefully better. Okay, so we have a fixed range from the previous day with a pretty tight consolidation here. We have a couple levels. Right off site, it looks like in the morning, there's no trade we can take now, but just in hindsight, we had this volume value area high, and we came up and respected that pretty well on the 1 hour. Actually, we're going to continue through. We'll mark them up in a minute. So that's previous day done. We'll unload. continue to mark up some more. So this day could be relevant since it's below the price action that we're seeing right now. So we're going to take the Sunday open for this week, or I apologize, we're going to take the Thursday close to the Friday, which would be our Sunday open. And you can see we've got a daily range POC down here with a value area low, and this price action wicked through and bounced off the top value area high here. So that's some of the reaction points that we were looking at from the other day. And then continuing on, let's go back and mark out our previous week. So Friday through to Monday, we're going to go to the first candle that was made on the Sunday open of the last week, and we're going to drag it right through to the close on Friday. So let's mark this out as our Friday range, put this in our FRVP, and this is our weekly range. I'm going to put this into here. And then just taking a glance back, we've got structure down here and structure back here. So we're not going to go too far with this right now because we would essentially need to deviate the levels down here and potentially get rejection off the bottom sides before we would look at getting support down here. But keeping in mind that we have a pretty large imbalance from February that can be looked at. And then this whole consolidation range that's happening here. So take a very large long-term profile and just take a look at it. We have a macro POC that's happening here over the course of a few weeks as we left that range, and we've now entered back into it. So we have a value area low here and a POC here that could be respected. If you look, I didn't outline this the other day because it's a little bit larger time frame, but the value area high that we set in as we left this range, we've entered back into this range, and you can see that this consolidation has respected that quite well, especially if we open it up on a larger time frame. So we've had one candle close above, two candle closes above, but the rest of them have all wicked down. So they can be chalked up to manipulation, pulling the liquidity that we explained shortly ago. So we could definitely be seeing a revisit down to this POC here, which would also align with our Friday daily range POC. So we've got a handful of levels here to take a look at. Let's start drawing some in so that we don't forget about them. So we'll start with the bottom. We've got our volume, and we're going to call this, what day is this? This is from February 2, 3, 4. So it's a very old level. It's over the course of weeks. So I'm going to call this our macro value area low. And we're going to put this in its separate folder called volume levels. Next, we're going to take a look at, by the way, I mean, maybe we can conference to Lorenzo or some other people who've been backtesting this. I have a few speculations on why it happens, but when you pull volume profiles based on a higher time frame, and then you dive down into lower time frames or switch up to higher time frames, sometimes the levels shift slightly. I believe it's because the candles, so if we're taking a 1 hour, we're locking it on the 1 hour, let's say here at 10 o'clock, which would also subsequently be a 4-hour candle start. But if I jump up to a 6-hour candle start, we're going to be in the middle of that, and TradingView doesn't have the opportunity or a way of anchoring that in the middle of a candle, so it's going to snap it to either side, which is going to slightly shift the amount of volume that it's measuring and give us slightly different levels. So what I've been trying to do is use these horizontal rays like Lorenzo does to mark out when I see levels that are the most applicable and that seemed to be respected on this time frame, so that when I dive down or dive up, that level is refined. And sometimes you'll see that the adjusted level won't be respected, whereas the original level put in with your ray on top of where it is much more respected. So just a bit of a tidbit that I've noticed through backtesting, and something that I'm going to dive a little bit deeper into in the future. I'm just noticing you got your TP there, Gratis. That's amazing. Congrats on that. Good job, good job. Everybody give Gratis a like on that. That's amazing. The team is leveling up. We are going for it. Going for gold. Okay, so back to where we're doing, let's mark out our POC here. By the way, as a service announcement, I like to run away with my talking, so if anybody has anything to say or wants to say something, or if there's another streamer jumping in to, just let me know so that I'm not talking over top of anybody. But I'm going to try and be as thorough as I can for the recording's sake. So we have our POC here, which we're going to call macro POC. I have to fix that because that's going to bother me. We'll put this in our volume levels. I should also be marking these out, so let's do macro value area low, macro POC. I guess I should specify because we could be looking at monthly levels, so we'll call this MA. We will take a look at the monthly profile for the sake of it. We've got a pretty big move here right off the bat, so I'm not going to look to try to get in that right off the bat. It is what it is. Sometimes price action gets away from you. I would have liked to have been in earlier today, but it is what it is. The biggest thing that I've learned on my journey is to not rush in. Quite often I'll rush in and see something happening before I get to have the larger picture painted in front of me, and it's never good to do so because you're always going to make mistakes. But whatever happens in here, if you're in the price action, that's amazing. I hope you take your TPs accordingly. If you're looking to take something that I was saying as a signal, I'm definitely learning, so I would not advise to take my signals unless you understand what I'm doing. I don't consider them signals, I just consider this educational and content. But as far as me recapping what's happened here, we're going to talk about this a little bit later once we get all of our macro levels established. So, because we did get a substantial move there, which is according to some of our bias, and it'll be interesting to see where we reach down with this. But yeah, back to where we were looking at. For the sake of seeing how it's respected, let's mark out this value area high. So macro value area high. Also, if anybody notices that I make a mistake, by all means correct me, because I'm also practicing all these concepts as we go. These are all new for all of us, so definitely anyone's opinion is valid and well received on my behalf. So let's do our macro value area high. Make sure I labeled it in here, and we did. Okay, so now that those are looking good, this is our macro range. Keep capitalizing that second name, it's driving me crazy. Okay. So let's take a look at our previous weekly. Did we already have that? I apologize, I'm getting ahead of myself. Previous weekly range. Now let's draw these out. So we have our value area low, which it looks like we're coming to right now. So this is previous week, value area low. Oops. Levels. We've got our POC, which can still be respected on a higher time frame, so we're going to mark it out. We also have to think that even though we've fallen through this right now, and it's not serving as a long, like we could have used it earlier in the week, but now that we're flipping it, we could definitely get a rejection back up there, which would confluence with an idea of continuation. So depending on where we find a floor here, coming back up, let's say for conversation's sake we come to the bottom of this fair value gap on the 4 hour, we could see a move back up to 50% of this dealing range that's being put in, which would confluence directly with that POC. So the reason that we're going to keep this on and we're going to use it as an applicable line, first of all, it's a previous weekly, so the weekly levels are always strong, but the fact that we've now pushed through it, we want to see a reaction if we come back up to it. But definitely if we deviate and start closing below this range, the first thing to look at is going to be the value area low, because before we can get up and respect this POC, we would have to enter back into the range of the previous week. So these are all things that we're keeping an eye on as we go. So this is our previous weekly POC. Oops, wrong one. Put that one here. Okay, let's lock that. For the sake of conversation, I still see us deviating these highs up here. So I'm going to, for transparency, you don't necessarily need to mark up every single level. It's a good idea to have them in the back of your mind so that as we progress through ranges, you can highlight them and draw them in. I'm going to draw them in for conversation's sake here so that we can continue with the macro as I do a roundup at the end of the day. So although this level is quite far away and we would need to flip these levels in between before we saw that being respected, I'm going to highlight it just so everybody understands, but you don't necessarily need to draw these in right away. Having the fixed range profile pulled from last week in a folder and being able to toggle it on and off and conscious that you did it on a 4-hour or 1 hour is applicable enough. So you'll see that some of the times when I do dailies, if I don't see the levels going to be something that I need to look at over the next little bit of time, I'm going to start to try to declutter my charts by not having every single thing outlined. Because as you can see, it starts to fill up pretty quickly. And it can be overwhelming for somebody who's not knowing what they're looking at. But at the end of the day, you always want to take a higher time frame level more seriously than a lower time frame level. So when we talk about these macros, they're definitely going to hold more weight, especially on higher time frames, versus the previous week versus the daily, which I haven't drawn out yet, but we're going to get down to. Looking at this value area high up here, this is our previous week value area high. Also working on templates on how I'm going to write all this in, because this is relatively new for me too. And I want to make sure that I'm accurate, because the more accurate you can be with your drawings, the easier it is to go back and review and do markups later on, which is very important. As far as I'm concerned, especially if you're doing this in hindsight, or if you are trying to back test, or if you want to go back and do journal reviews for yourself. I personally like to record the sessions. I use OBS, if you didn't hear me mention that in the beginning of the conversation. I highly, highly, highly recommend you guys do this, especially as you start to do live trades. I can go through a tutorial on how I've set my things up to see different things, like Discord chats and everything else, but it's superior because you can go back and listen to yourself, especially because you know what you've done. You can do it in a 2x speed or even faster if you're using a video editing software. And being able to hear exactly what you said as I'm saying it right now is very valuable to create a long-term lasting impression inside your brain on what it is that you're looking for. And it also makes the opportunity for you to share it with the group, whether or not you know what you're talking about or whether or not you're practicing. Sharing something like this with the group would be invaluable, because we could see exactly what it is that you're seeing or talking about or doing during your trading sessions, making it a lot easier to align all of our biases and our trading expectations. So together we can make a very strong group if we do something like this. I personally have been starting to upload my videos in the V3 overview, just so you're all aware if you haven't already been taking a look. I'm not trying to boast my videos, but I'm trying to show that this is there for people to use. Where is it here? Right here. So the V3 verified overview. I've got a couple videos in here, but I'm not the only one that posts in here. Quite a few people post in here, and there's a lot of content that can be absorbed. So if you're looking to find something in your off hours, I highly recommend taking a look at that. As long as, obviously, I've been backtesting all of Lorenzo's signals, even when they're taken in the, not signals, but backtesting all of the assets that he shouts out, especially when he does his weekly roundup. So I would advise doing all of that. That's very, very helpful. Go back over to here, getting back on track. I apologize for deviating. We've got our macro levels all mapped out now. So we can put this away for a second. So now that we've mapped them out, we don't need to have the volume profile up for the time being. There is some merit to looking at the like Lorenzo says in his ebook, the other higher volumes and the lower volume nodes are all different areas that can be applicable. Like you can see on this profile, we didn't come up and touch value area high, but there's a high spike here that can be seen with this bar. And look at where we stopped, right? I am not going to go and outline all those because as far as I'm concerned, when you start diving down in the lower time frames, a lot of those levels can be captured with subsequent ranges, but it's something to also take a look at and do some back testing on your own with, especially because I'm going to put the profile away and you're only going to see the outlined levels that I have. But definitely the value area high, the value area low, and the POCs of the ranges, in my opinion, are the most reacted, especially when you come into the macros. But even when you get into the lower time frames, those three levels stick out. So we'll definitely review some lower time frames here today too, because it looks like there was a decent move to recapture. So we've now done the macro, we've done the previous weekly, sorry. Something else that we can take a look at is the developing weekly. I'm not going to draw these levels on as it's developing over time and it changes as each candle is put in. So these other fixed ranges that we put in, they're not going to change because they're from one point to another and we're past that in time. But anything that's a current, so for example this current daily is running from the first candle past open all the way to now. As we put in subsequent candles here, this is going to change. As you can see, if you pull from here, that's our profile. As we developed a few more candles, we had volume drop down a little bit, and as we put in this high, you can see the value area high expanded out. So it's important to understand what it is that you're looking at as far as profiles. So if it's a current profile, keeping in mind that you can still take these levels as we return back up to them, but they do change over time. So it's hard to mark them out like this unless it's something you're looking at immediately. So this is our current daily. We're going to drop this down and put this in here. And then we've got a current weekly, which is starting from here. Yep, Friday, end of Friday to current date. So this is our weekly. Oops. Weekly range. For the time being, to the declutter, we're going to put those away for a second. I need to mark out my day. Yesterday. For the time being, I'm not going to worry about marking out the high because we would have to disrespect these two levels before looking at something up there. And we also have our more macro value area high to take a look at, so that's going to draw my eyes to that, and I can refine the analysis if we get there. But definitely the low off of here could be something that we come up and see. So this is our Monday value area low. And then for my marker, I'm going to write this as a previous day value area low. Put this in our app. Oops. This in our volume levels. And then POCs are always good things to mark out, so we're going to mark out that previous day POC right here. This is Monday POC. And we're going to name this previous day POC. So we're just setting up this profile, looking at different things that we could see. Okay, now try and get my bearings, make sure I don't miss anything before we move on to new ones. We did talk about, so it looks like we're not with this candle time frame respecting this at the time being. We've got 7 minutes left on this close. The first thing we could take a look at is our monthly POC level down here, but I do want to, did I highlight Friday range? I did. Okay, so we have these levels that we can take a look at as well. So I'm not going to outline this right now, just for clutter's sake, but it is important to know that we have a secondary volume line sitting on top of this previous weekly POC. So it's not only a previous weekly POC, but just above it is the end of the week, earlier day value area high. Nope, problem, Maria. Have a great day. I'm going to try to finish recording this session, and I will upload it later on. So if there is anything that you want to review, or if we get into anything later on, feel free to be able to check back and look at that. I look forward to being able to see people's progress. Definitely, Maria, if you can, if you're doing any trading, even if it's live forward testing, do some recording so we can all see. We can all start to benefit off of each other. Have a great day. Okay, back to what we were talking here. We've got our POC. So I'm not going to mark out that value area high, but we're going to mark out the POC here. And this is an earlier, we'll just call it, is it Friday? Yes, Friday. POC. And then I'm going to put it in my levels. And I'm going to call it an earlier previous day POC. And then we're not going to mark this out now, but again, likewise, if I start to see this level get disrespected, we'll pop this level up just to see. Actually, you know what? For the sake of what it is, let's just put it in. I like to keep all of these in a folder because sometimes they can get cluttersome, and then when you're on a lower time frame doing different things, it's nice to be able to toggle them on and off. And then I'm trying to keep everything labeled as neatly as I can because this is going to allow us to go back and review. So if I need a snapshot and say, hey, Friday, what was the previous day? I can see what I've drawn in, and if I'm missing something, I can add to it. It's also handy to do it in order, so I'm doing the Friday levels, so I can see through here. I don't have any other Friday levels, but I have Friday POC marked. We're about to put in Friday value area low, so if for some reason we come back up into the range and I want to see what this swing did, I can look in here quickly and realize without scanning every single one of these that I have not marked out my Friday value area high. So maybe coming down and toggling that on is awesome. But I would definitely advise doing this because I got it gets very cumbersome having all the volume profiles layered on top of each other. It makes it difficult to see candle formations, which also come into play later on. So looking at the value area low that we just marked out here. This is Friday. Value area low. Putting this in our level here. Putting this up, and this is an earlier previous day value area low. So now that we have all that marked out, let's take a look. I think that's it for the pulled profiles that we've had. We marked out Monday, we marked out Friday, we marked out the previous week, we marked out both the current daily and the current weekly, and we have a macro range. I'm going to pull my macro range from the bottom to keep it. Order where we went from further back to most recent. That's kind of how I'm staggering this. I can keep an eye on that as well as we pull. So I'm redoing the analysis today, but what I would do, I would definitely try to make this as neat as possible. Excuse me, on a Monday. Sorry. Make this as neat as possible on a Monday or a Sunday going into the week, and you can essentially shut on and turn off levels all week long without having to redo your analysis. But I wanted to be able to get a full video on explaining it, so that's why I cleared my charts this morning. Plus clean charts just feel good. So there's our Friday level taken care of. We can put that away for now. So we're getting some kind of reaction from this area down here. So that's interesting. So I believe that's it for my ranges. We got the macro. We have, that would be a Friday range, a Monday range, and there's the current weekly in there. My previous weekly, and there's my weekly. So right now, this current weekly range that we're putting in here, although volume down here could start to shift these levels lower, this is encapsulating this range that's been put in. So we can take a quick look at seeing if, we'll turn these off for 1 second to clean it up. But essentially, now that we've moved through our daily and weekly and macro ranges, it's time to look at what kind of levels we can set up on our swings and our fixed ranges, because there's the other two profiles that Lorenzo speaks about in the ebook. So the fixed range would refer to a consolidation period. So you can see we've had a consolidation period here over a few days. So taking the entry into that consolidation period right to where we've exited the consolidation period, you can see if we overlay another fixed volume profile, it gives us a slightly different profile from the weekly, because the weekly starts here. So it's not encapsulating the volume that happened during this original push into the newly formed range. So it's just nice to keep in mind that although it seems overwhelming that there's so many different volume profiles, it's actually a good thing because you can see confirmations on multiple time frames. You might see us respect these levels on a higher time frame, but on a 15-minute or a 5-minute, we might respect the current weekly. So you can see there's a slightly different. The POCs are the same, which is nice, but there's slightly different value area highs and value area lows. So it's nice to note for dual confluences that you have multiple levels stacked on top of each other, and just to understand where it is that they come from. So I'll turn this weekly range off again. For the sake of what we're doing, I don't think I'm going to worry about outlining this too much. I would want things to confluence with these previous days or previous weeklies before I took some kind of an entry short here. So I wouldn't necessarily use this value area low unless I had additional confluences on a different time frame. And the POC is slightly different. Do we change ranges? Is that why? Oh, this is current. I didn't draw it out. That's right. Okay. So we actually don't have this POC level for the fixed range because I didn't draw in my current weekly, which is what's overlapping there. And the current weekly is going to potentially change. So it wouldn't hurt for us to throw that POC on the chart. So that's what we're going to go ahead and do. Because this POC, which is the fixed range of the whole range, and the current weekly range, the current weekly range here are so close to each other and overlapping. So this this tighter value area low and value area high, which is also lining up with our previous days, is going to change as this week progresses and we get different candles, because we could have a large amount of volume down here, which would extend these lines down. So that being said, in hindsight, because we have all of that, we're going to turn this off and we're going to draw out this POC as an applicable level, and this is going to be our first fixed POC. So we are going to keep this as a fixed range. We're going to put this in here. We're going to put it above Monday's more recent Friday, so we're going to put it in between our weekly, our Monday range, and our Friday range. Drawn it in so we can get rid of it, and we're going to label this accordingly. So this is a fixed POC. This is a fixed range POC. Put this in our volume levels. Put that. Since Monday. Whatever, it's irrelevant, I guess. Okay, so I think we've taken care of most of the volume levels that are immediately applicable. The last thing that we can take a look at, we could look at a fixed range here or a fixed range here, and if we start to deviate below those lows, potentially a smaller fixed range down here could come into play. Otherwise, we're looking at swings here, but before we get too overwhelmed with levels, because there's already quite a few here, we're going to worry about what we do in this range and how we deal with the top of this trend line that you can see down here with my macro. So if we were to come up and deviate above that, do we have this outline? This would be so I don't have any levels that are really reading what's happening up here other than this previous weekly. So it wouldn't hurt to have something taking a look at. We made a series of lower lows. We came back up, so this was a range here, and then we broke out of the range. We came back into the range. So we could even take a look at this entire area and say, out of this consolidation, it would also include this volume, but as you can see, the highest amount of volume is drawn with the value area high, POC, and value area low. So we have a concentration of volume up here with another POC. So coming up and deviating this trend line up here, we could respect this up here. Just make sure that I don't have anything drawn in there. So there's a much larger fixed range up here. And I think for conversation's sake, we're just going to put the lows in. Although I kind of like the high. Do I have anything down there? So all I'm doing when I'm talking to myself here is I'm looking to see if I have other things that are mapping out the volume levels that are already showing here, on whether I need to map them out to deal with future TA for the week or next week, depending on how our profiles are visited. So we will just throw these in for the sake of it. I apologize to anybody who's getting overwhelmed with the amount of levels. Once we get everything mapped out, we will toggle stuff on and off as we go through the rest of our analysis and our trading. So this is I'm going to put it as, I don't want to label it as a lower time frame because it's much larger, so we're just going to say a large fixed. Value area high. Larger fixed. Value area high. So the reason I'm debating on the name is because you can have a much smaller range, like this one here. And if you were to need this at any point, this POC, value area high and value area low, would be considered a lower time frame, which would be labeled as an LTF. So it might be a little bit silly to make it the LF, but for now that's what we're going to do it with. If I come up with something better later in the future, I will. But yeah, okay, LTF, value area high. So this into our volume levels. We're fixed ranged into here. And I'll label this so I know it's the larger fixed range. Now I know it seems silly having so many different levels, but we're going to get very granular on the lower time frames. So even though these seem like they're super clustered together, once you start aligning with the lower time frames, it should become evident which ones we're going to take and which ones we're going to ignore at the time. But by having all of these on, we're not going to miss anything. A reaction in the middle of two levels, it's not always just a random reaction, it's something else that is not being looked at, right? That's why we're getting so many of these right off the bat. And we'll outline this. Fixed range. Larger. Fixed POC. Looks like I've labeled this incorrectly. So the value area low should have been this one down here. Larger fixed val, larger fixed POC. Okay. Okay, I think we're done with those. I'll turn these off for the time being. So we've incorporated all the ranges going down. We've got all the fixed going on. We've got lower levels to go look at. We've got, I don't need to take a fix down here because I have this Thursday or Friday daily range that's accounting for the volume that's down there. The last couple of things that we could look at to see if it gives us anything else of worth value is swings. So we had a swing low, we had a swing high, we had a swing low. taking us from the swing high to the swing low. It looks like it's overlapping with all the other profiles, so I'm not going to... We have a POC down here, so by taking it from here to here, it's showing us the large concentration of the volume during this swing down was at the lows. As you can see, we moved away, we respected the low here, and then we moved away from it. So I'm not going to worry about that for the time being. Taking a swing from the low to the high, we have a POC down here. So this could be something that we take a look at. But if you look at overlaying these levels, the POC lines up with the previous day, Friday, that we marked out, so we won't worry about taking that into account for the time being. And then last place that we can look would be this last major swing that we made from these lows all the way up. Broke structure, we made a low, and then we broke up, so here to here. And how does that contrast with our other levels? So we have a POC that's lining up pretty close to this weekly, previous weekly value area low. So this is a swing that we can take a look at drawing in. Swing POC. And since we kept this, we're going to use this as a swing range. Okay, so that's that. So we have quite a few levels now that we've outlined that encompass our entire trading range, which we're in, okay? So if we get moves above here, we've got levels that we can take a look at, and we can always do further analysis later, right? Like if we start to deviate these, then obviously there's no price action for us to look at right now, but we can take different swings and different things, and we can look for flips. And if we deviate these lows, then we can start to look at previous ranges. So we can look at this swing down here between, like, let's say this high and this low. Oops. This high and this low, and say, okay, we got a POC sitting down here, which was also a previous daily open. So if we start to get down there in subsequent days, or if we have some crazy move down there in one day, then we'll start to look back further at different levels that we can pull. Because if you remember at the very beginning of our conversation during our top-down analysis, we have a daily order block there. So if we start to make a move down into this daily order block, pulling things like this swing, or fixed range between this whole consolidation that we had here, or this whole consolidation that we had here, can give us indications into what's happening. And then likewise, we have a pivot point down here. We have our 50% of our weekly structure, so there's a lot of different areas that we could find support on as we came down. And then we have our larger, these three lines here indicate a rough golden pocket area as far as the fib goes. So on the weeklies, we could take a look at this fixed range here. As we moved down, we might respect that with a higher time frame, like a daily or a 4-hour. And then coming down to the low, we've got another consolidation that we made here before we left that range. So coming down and just subsequently bouncing off of, let's say, the 62 or the 70.5, it's not just bouncing off the 62 or the 70.5. It could be bouncing off of these high volume nodes if there is any from the past, right? So like you can see, we have a value area high sitting right on that line, right? So this is why fibs work, and this is why the levels are confluent. It's not just because it's a fib level and people are longing this. It's because algos and such are looking at high volume levels, right? So there's a high volume level sitting there. So if we ever come back down to visit 15,360, 15,350, you know, there could be some kind of reaction happen there. Now, I'm not saying it's going to come down, bounce, and go to all-time highs, but that's where you can start to fix. You can start to adjust and see. Maybe on that day that happened, you could see something. So just a way that you can confluence and add levels as you need. That's kind of something you have in your repertoire. And then, yeah, so. Okay, we've drawn out our levels. Let's see if we can dive down a little bit deeper and actually do some price action analysis. Unfortunately, I don't have unlimited time today. At some point I'm going to get cut off at an undisclosed time, so we're recording as much as we can, and we've now got our base levels down. So moving forward throughout the week, we should only have to update these levels and then be able to jump into price action quite quickly, much more quickly coordinated than we did before. So a couple notes about the macro, since we've now dumped down here and hit this. There's a daily support and resistance level here that I've marked out. You can see it was resistance, resistance, we flipped it. It was a form of support here, we flipped it again, then we flipped it immediately after deviating these lows. So this was a manipulation push down. As we came back up, we've now respected this. We didn't during this initial push, so this was a manipulation push past that support and resistance again. But as we come down here, obviously these candles haven't closed yet, so we could still move down lower. But for the time being, we're respecting this level. So it's possible, just from this standpoint, without looking at anything else, that this candle closes within our range here today, and maybe that's the potential range that's going to be put in with this candle. So just an FYI with that higher time frame level. It also confluences with this daily order block, the high of the daily order block, but because we've already hit 50% here, we actually closed a little bit lower than 50% on the daily. It's still leading me to believe that we're going to come down and take these equal lows at some point. So it's a matter of whether we're going to deviate this first and then take the equal lows and move down further, or whether we're going to move down, take these equal lows, and then come up and take this liquidity. But those are the two focal points that I'm looking at right now as far as I see, as far as external range liquidity is concerned. Obviously, this trend line is not the only liquidity we have. The high of this Thursday would also be a potential point, but in order to push the high of Thursday, pulling that liquidity, you'd have to pull the trend line liquidity that's generated, and you also have a series of equal highs that are up here. These equal highs I could definitely see being pushed as well, so that's where my thesis. These equal highs here, I can see these being taken out at some point, so that confluences with us deviating above Sunday open and taking out this trend line liquidity. So that's where my macro ideas are coming from. And then we have the equal lows down here, which we already spoke about. And then this low that was put in, so we were in an uptrend. We broke these lows and put in this low before we put in the most previous all-time high here. So there's definitely liquidity sitting under here as well. And subsequently under here, because this was the last swing low that was put in before that high. So liquidity sitting here on a higher time frame, and to push down into this OB and into these imbalances is also an option. So I'm trying to keep all of this in reference. So I guess let's take a look at immediate price action, and then depending on what we see and if there is any other kind of small setups. I'm kind of late in my trading session here. As far as getting into a trade now, I probably won't, so I apologize if that disappoints anybody. But as far as aligning our volume levels for the week up to this point, we are now established, and we can take a look at what's happening, and if not, we're going to review the London session, because I wasn't able to trade London, but that's my primary trading session, so I want to acknowledge what happened and what moves were possible. So starting with our 4 hour that we originally started this conversation with, we had an indecision candle here that took out the highs, moving above the previous day open and taking out the high of the previous day. So liquidity swipe on the buy side, and then you can see we've got the subsequent liquidity swipe to the sell side. So this is the consolidation choppy market that everybody's been referencing, that's been trapping and pushing a lot of traders offside. We have the open of this 4 hour candle, because we took buy side and we had sell side intact down here. Could have been a potential entry looking to take a short off of this wick, and then looking at swing low to swing high, we still had 50% that hadn't been tapped yet, so it made sense to after we deviated these highs to get a move down to at least 50% to balance that price range. And you can see in hindsight the level we spoke about holding, as it seems to be solidifying and holding here accordingly. We have a 1 hour candle respect here now. So let's flip on our volume levels and see if we can get any contrast with our 4 hour. Marked out. We didn't higher time frame indicating a rejection there that I can see of. Although I don't know if I mapped swing range. That was the previous one. I don't think we looked at this one. So there is a swing from this high down to here, and we had we didn't quite get up to it, but we had a POC and a value area low here that could have been rejection targets, but obviously we didn't get to it, so there's no point. And our range here, next profile, so we have a new number of days in there, so let's take a look at our levels again. So I don't see anything on our higher time frames. We didn't make it all the way up to that val, so let's look a little bit lower. I do want to make a note of this candle. Where is 50% and where is 60%? Okay, so as far as this vector is considered, I'm not saying we can't close in the rest of it, but I do consider this balanced for the time being. So this could be the move down that we're going to see to swipe more liquidity, or this could be our consolidation. Maybe we put in a low, lower low, maybe put in a high, and now we broke that range. So this is a larger range, we've deviated to the downside. Thank you very much, Tommy. I appreciate that, bro. I appreciate it a lot. Trying to put the work in. I definitely want to elevate everyone as much as I can, because I know that elevating others around you is only going to elevate yourself, and I'm definitely here to win, so I'm hoping that we can all structure stuff off of each other. Yep, it's the truth, right? Rising tides raise all boats, right? So I'm hoping that we can keep it going, keep the pace going. Tommy, something I spoke about with the group there this morning is I've been starting to record all my videos, as you guys have been seeing, so I'm trying to encourage everyone else to do the same. OBS is free, and anybody who is on a PC should definitely be recording their sessions. Even if you don't know what you're doing, I would definitely be fascinated to see what others are looking at, and it's much easier to see in video format. So, moving forward here, so we didn't label this. That's ugly. Why didn't we label that? Swing POC. And that was from our previous swing up. So that's a pretty interesting level to be respecting there. And that's why I was saying that even though it gets overwhelming when you're laying all these on top of each other, it's important to do so, because you know, whereas the previous weekly might not get respected immediately, that swing being respected is pretty intense. So going back down, take these off for a second, take our top down off for a second. We spoke about this range getting rebalanced, and we were looking at possible confluential ideas on the 4-hour candle wick. This 4-hour candle wick is 10 o'clock. It's a good expansion hour. Typically, anybody who hasn't done the work as far as price action logs goes, I have been identifying that 6 a.m. 4 o'clock candle and the 10 o'clock 4 a.m. candle usually put in the largest expansions, obviously with exceptions on different days and news and stuff. But you can see that our 6 o'clock candle took out lows, and we put in an expansion to the upside. We met our liquidity criteria and rebalancing criteria, so the 10 o'clock candle didn't need to necessarily expand up. It's expanding down and giving us our lower. So the largest expansion, what I'm anticipating for the day, and this doesn't mean anything, but this could have been the largest expansion that we're going to experience. 1.3% expansion is actually larger than some of our typical expansions, so it's reasonable to believe that this could be the range that we're looking at for the day. But obviously, anything can happen. You know, we had this PM session expansion that's larger than a lot of the previous expansions, and that definitely threw people off because that happened in the 2 p.m. hour, which we don't always see in NASDAQ. Typically, the 2 p.m. is rebalancing things that have happened from the morning or overnight. So, got to keep in mind that although the market rhymes, it doesn't repeat. So, looking at, just try to get back on track here. 4 o'clock. So our 10 a.m. open that we had here. We're gonna start looking at this. This is our 4-hour candle open. I like to leave mine blue. That's gonna go until 2 o'clock when the next 4-hour candle opens. And obviously 1-hour candle opens the same as it. And then we're getting our new candle open here. So we've put in a small lower wick. Doesn't mean we can't come lower than that, but it could be that this expansion is going to come back up into this range, balancing the bearish expansion that we got from New York. We've also got some interesting levels. Obviously we have some volume levels in between that we can take a look at rejections from, but we also have not as much respected, but it's still respected sometimes, this midnight open, and then the yellow line is our daily open from yesterday, the gap opening yesterday. So we did have a gap, and we did fill that gap, and we've washed through that a few times, so it's possible to come up and test the bottom of that gap, which would also confluence very close with this midnight open. So quite a few levels that are happening in there, and thank you very much, Gavin. That's appreciated. It really is. Taking a look at slightly lower time frame, so we're starting to break down this candle. So after we had this liquidity push up here, my session would typically have started between 9:30 and 10. I don't like to get in at 9:30 because there's always some funkiness happening. But watching the liquidity sweep that happens between 9 and 10 o'clock is always important. So we had that sweep up, and then we managed to close down lower. And then this push up could have definitely been a potential entry. So if we dive down a little bit deeper, we've already established that our higher time frame levels, there was nothing applicable in this immediate area. So we can start to look at more local ranges and stuff. So we had, I apologize, I have a phone call that I have to take, everybody. I'll be right back. Okay, we got a quick question here we're going to take a look at, or a comment. Put the FR here, let me bring this up for the recording's sake so that I can view it later too. Okay, so, sorry to interrupt, we have a question. If we put the FRVP from the previous low to the New York high on the 5-minute, we could consider that an entry from the IMB, since the previous high was taken and it gave displacement move to the downside, leaving IMB from where it's now currently. Okay, so you're saying from the previous low to the New York high. That's awesome. That's awesome that you just mentioned that, because right before I got the phone call, that was the next thing I was going to take a look at, is this swing coming in. So let's take a look. That's awesome that you had that. Did you get to take that there, Raven Sword? Fair enough. Me too. I talked through it. I'm bad for that. But it's okay. So that would have been... I actually, for myself, in the way that I personally trade, I wouldn't have been... Oh, actually, I see what you're saying. Yeah. Okay. That's pretty cool. Very good observation. So anybody who might not understand what he said, he's pretty clear in what he... Or I shouldn't say he. They are pretty clear in what they said. But from this swing low to this swing high, we had... I apologize, you did say the swing, right? Yes, okay, just making sure. I didn't want to start talking over you, putting words in your mouth. So, from the swing low to the swing high, if we pull a volume profile, we can see that we have a value area high, value area low, and a POC. So what they were referencing is after we made this purge of all this liquidity in the start of this 4-hour candle, which is illustrated here at 10 o'clock, we made a move up, and we were talking about this wick on the higher time frame, wanting to get into an entry here. You can see that we respected that POC, and there definitely was an entry that could have been had there. So as far as a one, I do my entry slightly different in all transparency, so I am going to review for my own sake and my own videos what it is that I look to get more granular with it. But as far as LTA concepts, I like to review those too, because I like those to be present in order for mine to have more confluence. So as far as a 1 hour perspective goes, we've had one test of that level, and then we flipped. So we didn't get an entry here. The 30-minute moved away too fast for us to get an entry. The 15-minute gave us 2 wicks. So as I like to see that third wick and a move below the close, but obviously we expanded pretty low. So you could have taken a more aggressive entry and said stops above this high as we moved below. I kind of would like to have seen the candle flip before, so on the 5-minute. Oh, I apologize. Did you say that too? Yeah, you did. I'm sorry. I'm all over the place. My phone call threw off my concentration. I'm just going down. So yeah, we didn't get quite an entry on the 15-minute here. Dropping down to our 5-minute. I'm going to draw this out because they do fluctuate. We start to move our time frames. So that's our POC, and we're going to come down to our 5-minute. So you can see the start of our candle, we came up and we wicked, and then we wicked. Oh yeah, perfect. I see exactly what you're talking about. So we had multiple wicks here, 2 wicks here, one respecting, and then the second one was a flip. So as we came up with this candle, we did close up here, but this candle washed down past the open here. So you could have taken a position, and your position would have looked something like this, with stops above the high, and then targeting our lower liquidity that we spoke about at the beginning. So we had liquidity sitting down here. We also had this low. These lows were all pushed, so in this area would have been potential first target without. But we did speak about the. Do I have it on my top down? I don't. So we did talk about this dealing range that happened between the low and the high. Oh, let's start at 60%. I want to see 50. So none of this dipped down and touched that 50%. So even though there was liquidity sitting here, it would have been very reasonable to expect us to come down to at least that 50%. So that would have given you confluence to hold quite a bit lower. And we saw that dump happening as I first came on and started to talk about volume profiles. So yes, very good catch, Raven. That's amazing. That would have been an awesome position to have taken. That's definitely something that we're going to catalog and put into our repertoire and our memory. So we're going to do this as, what day is today? Today is April 9th. So April 9th, potential short, and this is the New York session. So I like to do these with my positions so that at the end of the day, if I'm getting a chance to review or for tomorrow, I can take a look at it. Keep in mind that you can save multiple, I don't know what everybody has as far as TradingView subscriptions or if it's restricted, but you can save multiple profiles. So I actually have a profile, it's not listed here right now, but I have a daily review profile that I like to take I would like to take this and pop it into, so that when I'm reviewing for the week or reviewing for the month, I can look at that as a pretty substantial short that could have been taken, right? We left that area almost immediately, and that would have been amazing to have got captured. So if you're drawing from the concept that we spoke about, coming down to 50%, extend this out so we can manipulate it, unlock it. I don't want to say bare minimum because you can take profits off based off a lot of different models, but just reaching down to the confluence idea of this 50%, which you can see in hindsight we got, that would have been looking at a 6.6 to 1. That's an amazing risk to reward. There's nothing wrong with that. Doesn't need to be refined anymore. So I will admit I'm coming to the end of what I'm going to be able to do, unfortunately. So I will try to wrap up as best as I can, and I will continue this recording at a later date. Or if I don't get a chance to, the next time we're in here, we can continue to review. But as you can see already, based on the strategies and the ideas, we didn't get any of our higher time frame volume levels respected to give us this trade here today. But what the higher time frame does is gives us an outline. So you could have even said, looked for reactions at the swing POC, the previous week value area low, and there's no reason that you had to take profit here. This would have just been an opportunity to take a profit off, or if you had a much larger confluenced idea, you could be holding for one of these other levels, right? So on a 15-minute time frame, we didn't quite respect that yet, but on a 1 minute. So I'm getting yelled at. I'm going to have to go here soon. My daughter's going to come and interrupt us, but you can see that on a 1 hour we've respected that. So the moment we had that 1 hour close above that, it's reasonable to believe that the lower wick here could have been put in as a take profit target for here, which would give us, we're hovering right around that 50%. But obviously, in hindsight, coming down lower, see any respect here. Thanks for the masterclass. No problem. That is an incredible. I appreciate that comment. I do not consider myself masterclass worthy yet, but I definitely aspire to get there. That's for sure. So yeah, there's definitely a lot of opportunity that can be done with these LTA concepts. I'm going to wrap up for now so we don't get interrupted by screaming. I'm sure everybody doesn't want to hear that, and I'm going to go get on with my day and get my exercises done. A worthy note that I want to start driving everybody towards is this group has something called the Limitless 33. It's something that's changed my perspective largely on discipline and working forward on a lot of different things versus just trading. So I encourage anybody here who's looking to seek growth in their trading and their overall life that you look into Limitless 33. Don't feel like you're obligated or you have to do as much as some other people. Just getting in there every day and trying it is definitely going to drive you forward. And I can tell you the momentum that you get from doing something like that, the sense of accomplishment that you get. I believe it's Jordan Peterson that talks about one of the most important things you can do is getting up and making your bed in the morning, because that's the first thing you accomplish in the day, and that can build momentum for the rest of your day. So for myself, getting inside and doing those LTAs, some days it's really difficult to. So doing all of those confluences, hold on 1 second, sweetheart, okay, I gotta finish. holding with all of it. I'm sorry, everybody. Anyways, I'm gonna have to sign off here because we've got a resilient one here. But anyways, check out the Limitless 33, everybody. Okay, I apologize for that interruption. She's definitely my #1 priority, so that takes precedent. But I just wanted to let everybody know about the Limitless 33. Check that out. It's unbelievable the momentum you can get and the self-confidence that you can give yourself by accomplishing things each day, and by driving yourself forward and making yourself do so. You're definitely going to see progress in yourself. And that, like I said, the momentum is something that is really hard to turn against. So if you're somebody who's finding a hard time getting motivation to do things like working out, or to getting your TA in each day, or to being diligent in your trading practices, this is something that I personally think can drive that forward. And by seeing everybody around you doing it, it's also going to motivate you to do more each day. So thank you very much for listening to all my rambling, everybody. I appreciate the input, Raven. This is an amazing insight here. We're definitely going to have to dive a little bit deeper into. Anybody in the group who wants additional help, feel free to hit me up with a message. I have no problem. I have a very busy schedule, unfortunately, but I will go out of my way to meet up with people, even if it includes me skipping out on a trading session myself. Because like I said, elevating everybody else is my top priority right now, because by elevating all of you and hopefully finding other people like you, Raven, who obviously know what they're talking about as well, we can put ourselves around positivity, and that positivity is going to only breed future growth. So thank you very much for listening, everybody, and I hope you guys have a great day.